Hello everyone, I'm going to explain you a very simple yet very powerful strategy to trade index futures, and any beginner can follow this strategy, but I request try to stick with index future, that is Nifty and Bank Nifty futures. We're just going to use a 5-minute candlestick pattern to for this strategy. I hope everyone has Zerodha account or TradingView account or any other platform that gives you access to charts. Coming to the strategy, I have opened April Nifty future for you. As I said, for this strategy, we just need 5-minute candlestick charts to be selected. So once we have selected the 5 minutes chart, uh, what you just have to do is wait for the first three candle close to happen. And once this candle close happens, you just have to mark the high and low of the first 15 minutes. So let me just explain you how it works. For example, uh, let's so f we are going to look for first three candles close of, and we are just going to look for high and low of first three candles. That is basically we are looking at 15 minutes candle, 15 minutes time frame, right? So um, this is the first, for example, in this case, this is the first, this is the high of first 15 minutes, and this is going to be the low of first 15 minutes. Okay, once you have identified uh, the high and low of first 15 minutes, what you should do next is you just have to wait for any close that happens above or below this high and low of first 15 minutes. So basically what we have done is we have taken first three candles, we have plotted first high and low of the first 15 minutes high and low. Once that is done, what you should be now looking for is any close, again repeating it, any close, not the wicks, any close that happens above this line or below this line. These lines are nothing but high and low of first 15 minutes. Once you have seen, for example, now in this case, you see this, uh, there has been instances where it was trying to drop, but at the same time, the 15-minute low was not breached. So basically the close was not breached. So now, for example, in this case, now we have seen there is a close happening above this. So if you can see, let me just move this a bit. Okay, now you can see in this case the close has happened above our range, which is 14,576, which is was marked by us. Now the close has happened at 14,581. You can see above. So now we're going to wait for this. Once we have seen that the close has happened, we'll wait for the next candle to follow up. So once we see this kind of a candle, which is the close has happened. Now we are actually into this trade. Uh, just go for this trade at the opening because it has closed above the uh, high marking that we have made. So now we have entered the trade at around, let me just mark that for you also. Uh, Let me just see, open is, let's say this. Okay, 14,599 is the open price. So if you can just look at this, you can clearly look at the markings above. Oh no, it's not 14,599, it is open is 14,580. Let me just, give me a second. So you just have to mark it. I'm just going to mark the open. So this is where we opened, right? You can see this absolutely at the top, right? 14,580 was the open. So now we have entered the trade technically, right? Once you've entered the trade, you should be not bothered about the target. You should always look for the stop loss. In this case, the stop loss would be the low, which is 14,514, which we marked, which is the first, which is the low of first 15 minutes, and any close below this, you should be exiting this trade. Simple as that. So not every trade will give you the best, but this strategy has worked more than 80%. So you can trust this strategy. So any close that happens below this, you're out of this trade. Simple as that. So you entered now at 14,580. Now what should be your target? So target should be simple. So it should be the difference between the range, basically the high and close of this range. For example, 14,575 and 14,514, roughly point 50 points, right? 14,575 and 14,514. How much is the difference? Just give me a second. Just let me just calculate it. 14,575 less 14,514. So roughly about a 60-point range, right? Okay. So now your stop loss is pretty defined. So you know the stop loss, and your target should be by default either it's 1:1 or at max 1:1.15 or as per your risk appetite. So I will not suggest on that, but I look for a target of 1:1. So if I've entered a trade here, which is like 14 uh, 57, whatever the rate at that point, so 14,580. So 60 point is my target, right? It's as simple as that. So 60 point is my target. So what is my target now? 14, I've entered 14 580. So you can just add about 60 points to this. So 14,580, we've entered the trade at 14,580, and we will add about 60 points to that. 14,580 plus about 60 points. So my target is 14,640. So let me just mark it uh, for my reference. So 14,640 is my target. So let me just mark this very clearly so that everybody can understand what I'm trying to. We entered at 14,580, so I'm just putting 14,640 as my target. This is 1:1, right? So now look what has happened, right? It once the trade got active, this is where we entered, which is the entry price. So blindly you can enter at a trade. If the close is above this, your stop loss is predefined. You just have to carry this trade. So you can look at clearly like 14,640 is my target, and it eventually reached this target. So that's the beauty of this strategy. You don't have to do much about it. Only thing you should worry about is once you see a big range. So for example, when you see a stop loss of more than 100 points, I would suggest try to avoid those trades, because stop loss above 100 point doesn't make sense. 100, 120 points. But yes, it will work there also, but the risk management has to be a little more powerful. You cannot expect a 100 point risk reward in that case, but yes, definitely it will work there also. But for a beginner, for a person who is not averse to good risk management, I would suggest just go for trades where the range is about 50-55 points, because your stop loss is restricted. But this is a very powerful strategy. So we'll, as I said, just follow this strategy, go back, do a lot of back testing, understand for yourself. This gives you very very good results. I mean, we will be doing a lot of back testing right now in this module itself to see how it performed previously and in the current trades also. So this I'm just showing on a 26th March time frame, but yes, yeah, we'll. So the prerequisite for this trade is nothing but a price action analysis of 5-minute candlesticks. We are just marking high and low of first 15 minutes. We are taking a trade where either of the things get broken, gets breached. For example, in this case, the close happened above the high, so we are looking for long trades. Had it happened below here, we would be looking for short trades, and the risk reward is simple. We will be looking for about 60 to 55 points. That's it. simple. Hope everybody understands this concept, and it's pretty simple. You can apply this uh, on a day-to-day intraday intraday trading perspective. In terms of if somebody doesn't have adequate capital to trade on futures, so I would suggest if you want to trade in options, you can look for in the money options of 100 to 200 points in the money range. So you'll get the same kind of results. But yes, the discipline has to be maintained. It is simple. Options will have a lot of premium decay if it starts moving in a particular range. But in case of Nifty future, it's more like a spot price, right? So it's advisable trade less quantity, but yes, your success rate and your uh, chances of making mm, less losses, I'll say less losses will be better. In case of options, what happens is people will enter here probably seeing this kind of a structure, and once in this case at least you can see that it moved beautifully up. But had it moved like this in the had it moved in a zigzag fashion for a lot more time, for a future trader the stop loss is fixed, right? But for a option trader the premium decay is happening. So that's the difference of trading in options and futures. Both carry their own risk. Options comes with people think that option buying is easy because the premium is low, but at the same time the risk is even higher. So hope everybody understands this concept. I We will be going through more trades on the same setup. Hope everybody is understanding this concept. Thank you. So let's do some backtesting and see for ourselves how this strategy works. Let's go to 24th March and see how to use this strategy for trading Nifty future and see the result for ourselves. So I'm in the replay mode for 24th March, and let's see how to use this strategy to take a long or a short trade. So let's start. So this is the first 5-minute candle for you, and this is the second 5-minute candle, and this is the third 5-minute candle. So as I said, what we will be doing is we will be marking out the first high and low of first 15 minutes. So in this case, if you see the high is I think 1485 14850, and the low is yeah 14810. So we will be waiting, as I said, we will be waiting for subsequent candles either to close above the high or below the low. If it closes above high, we will be going for a long trade, and if it closes below the low of 15 minutes, we will be going for a short trade. So I'm just going to write it down for you so that we will be using this as a reference. So the high is 14850, low is 14810. So a range of about 40 points, right? And we will be looking for a risk reward of 1 is to 1, or maybe 1 is to 1.5, and as per the risk appetite. So this so that now this is clear. So I've just put it here so that we all know what to do now. So now let's see how what's happening. And as we say, as I've said, we will be waiting for any close to happen above or below. So let's see what happens next. So this is again, it is not closed below, so it's still in the range. We're just going to wait for any of the up or down, any of the high or low to be broken. Still not. So this is the first time the close has happened below, right? You can clearly see. So now, as I said, we will be looking for a short opportunity, okay, in the subsequent candles. So let's see what should be our entry and what should be our stop loss and what should be our exit. So I will be looking for an entry on the opening of the next candle. So let's see where the candle opens. So I'm just pausing it for you. So this is going to be my entry. right? Uh, 14803 is my short entry. So I'm entering a short trade at 14803. My risk rewards are very clear. I'm looking for 1:1. So my stop loss is very clear. So my stop loss SL is 14850. Any close which happens above the high of first 15 minutes, I'm going to exit this trade, right? And my target is pretty simple. I will reduce another 40 points, 40 to 50 points. So let's say in this case, I'm going to reduce about 50 points from this entry. So my target is somewhere close to 750, right? Pretty clear. So this is pretty clear, right? Now we are in a trade. We have entered this trade at 14803. Our stop loss is 14850, and our target is 14750. Let's see how it plays. So we've entered this trade at 14850. So we just wait and to see how the trade works. I think it's still so. We just got it's. I think this hit. No, not yet, right? So let's see. Yeah. So our target was 14750, and I think this itself has done it. So what I suggest is either you trail your stop loss or use it effectively to maximize your returns. But as I said, never be too greedy. This is a strategy. This has been back tested very rigorously, and I find it very useful. I do it personally for my trading. So I don't mind losing another 100 points, 200 points. That's fine because I have to play every day using the same strategy. So you can see our strategy definitely worked, and we got an exit at 14,750, so which is about 50 points. So decent enough profit, right, in Nifty future. So let's look at more examples, see how this strategy again works. I suggest do a lot of backtesting and see for yourself the results. And let's go back to Nifty again and see how this strategy again worked. So I am on 19th March. Okay, this is 19th March, 18th close, and I'm going to play it for you, the 19th March, and we'll see what type of entry. Again, we have to mark the first 15 minutes high and low, and then see for ourselves what trade we should be doing. Let's start. So this is the first 5-minute candle. This is the second 5-minute candle. This is the third 5-minute candle. I'm just going to pause it here right now, and we're just going to mark the high and low. Okay. So as you can see, just a minute, it's still running. Okay. As you can see, this is kind of a little high range, and I don't recommend everybody to do it unless until you've backtested it very accurate. You've backtested it for yourself. So this is the high, and mm, this is going to be your low. Just a minute, I think I'm not marked it correctly. So I'm just going to mark the first. So this is the first. This is the high, and this is the first 15-minute low. You can clearly see this, right? Yeah, and this is not the low. I think it's my computer is just a minute. Yeah, yeah. So this is the first our first 15 minutes range of. So let me just put it here. So the high is 14,592, 14,592, and the low is 14,468, right? 14,44, 14,468. 4468. Yeah, range of about 130 points roughly, right? 130, 120 points plus. Just range of 120 points plus. So now we are going to just wait for this, wait and see how Nifty works, Nifty trades in this range, and we will be just waiting patiently to see either of the sides getting taken out, either the high or the low. So my targets, our stop loss is very big in this case, 120. So I just suggest you do a lot of when you see this kind of range. My suggestion is to avoid this trade, but again, if you have good risk management, why not do it? Because this is 120 points, right, range. So you're going to get a risk reward of 120 points, 120 points. So let's see how it plays. So I've just marked this for you. So let's see how. Now we're still in the range, so we are patiently waiting for any close that happens above or below the high or low. Very clear, right? And we'll be taking an entry on the subsequent candle at the open once the candle closes above or below. So still in the range, no trade as of now. It is already 10 o'clock almost. Yeah. So still in the range. So we're just waiting patiently to see how it is performing. So this is something. So now this has given a close, right? This, just a minute. Yeah, this candle, if you can see, has given a close above. You can clearly see the up. It closed at 14,600. So my entry is in this candle, right? Uh, Around 14,603. No, I think where is it? Sorry. So my entry, so this candle, if you can clearly see, it is written over open, high, low, close. So this candle, sorry, this candle actually closed at 14,600, which is above our first 15 minutes high of 14,592. So my entry is in the subsequent candle, which is the open is about 14,603. So I'm just going to mark this for you so that we're going to see what type of trade that we are going to do. So I am entering this trade. I'm going long on this trade, long at 14,603, and my risk rewards are very clear. Stop loss is 120 points down, so roughly let's say 14,580 is my stop loss. Uh, Sorry, 480 is my stop loss, and my target is again about 120 points above 14,603, so which is 14, uh, let's say 730, kind of a 730 or probably 750. Let's say 730, 750 zones is my take profit, right? So now let's see. I've entered the trade at 14,603, and now I'm looking for a target of 14,750. Let's see how the Nifty performed. So still in the range. So now again, let's see. These are one of the beautiful trades you'll see when you get a higher range, but at the same time it comes with a lot of risk because your stop loss is pretty deep, 120 points. So let's see. Still it's in the zone. I have entered the trade. You can clearly see. So I'm looking for a profit around uh, this zone, right? Kind of this zone. Let's see. Still, now we are in a decent profit already, right? Either you can now switch your stop loss to make it at cost, or start trailing your stop loss. That is what I would suggest when you are in a high range kind of a scenario. Now let's see how it performs. So 14,750 is my target, and I'm about close to 100 points already. See the drop. Now that's the reason I say when you have a big range, try to play it with trailing the stop loss, or ensure you're at cost at least immediately as soon as it starts giving you about 40 to 50 points above. So still we are in the game, and I'm still looking for 14,750 as my target. It is nowhere close to my entry price. So yeah, it is come back to my entry price. So still we are above the entry price. So let's see how it performs. So we're still in the trade, and we'll still keep moving on the trade. So let's see. Let's see now. Let's see. It's one of the best strategy. One of very simple strategy. I can say this is a very simple strategy. If a person can adapt and use it, I'm sure you can use it very beautifully in your trading. So still hovering around nowhere close to our stop loss. At the same time, it is if you can see, there are a lot of lower side wicks getting formed, which means price is taking support around the highs of uh, the first 15 minutes. Let's see how it performs. So that this is you have to be patient. You you have to be disciplined. If you're following one strategy, stick to it. Don't get into multiple strategies. Don't get into trading with emotions. Just simple. If you're following a strategy, then better you follow it. Uh, so let's see. Still hovering around uh, the range, not the range, above our buying price. So let's see when it's still. So the best trade was again there. It has given you enough opportunities to enter the trade. So first time you got this entry at around this place, now at around 10:25, and now again there was an entry at around about 12:15. So so it has given multiple entries, so people should not say that I missed out on the trade, or somebody if you're following the strategy, so you would be, had you missed here, you would have taken it here, because it is very clear. Now you will follow this rule. As per the rule, you will be exiting the trade as soon as it closes below this line. So let's see, it's almost, we've got getting about 100 odd points now, and now I'll just stop it. So our target is hit. So you can clearly see it has managed to cross this line. So 14,750 was our target, and it beautifully crossed it. So about 150 points, 130 plus points. I mean, now I'm just still in the replay mode. So see, you can see the result for yourself. So this is what happens once you have a big range. So it will continue to play like this. I think I don't know. I don't remember the exact closing where it happened, but I think as per the strategy, if you follow, we got what we wanted for. That is, see now, this is another 70 odd points from where our target was. So that's the beauty of this strategy. I mean, if you can actually use it with a very good risk management, I'm sure you'll make good amount of money. But I request people who don't are not familiar with technicals, I would suggest avoid ranges greater than 100. That's it. That's my advice. So that's pretty much it. So you can see it actually ended very still in the uh, so I think we're about to close for the day, and it's still, so I think uh, so you, that's why as I said, if you follow the strategy, you got multiple entries. You got an entry here, you got an entry here, you got an entry here, you got an entry here. Nowhere close to the stop loss. Nowhere close to the stop loss. So it is pretty clear, right? So, and it is taking support. If you can clearly see, it's taking support at these zones. So it's done. I think it's we've done for the day, and it closed somewhere here. But yes, again, as I said, follow the risk management. That is the key. So higher the range, higher the profit. At the same time, higher the risk. So I'll also take one example from Bank Nifty and see. So let's take one more example from Bank Nifty and see how the strategy works in Bank Nifty. It's exactly the same. So let's see how. I just have one caution here. As you know, Bank Nifty is one of the most riskiest instrument in trading. It requires a lot of risk and very good risk management in order to be profitable. Most of the people come with the mind frame that they can make hell lot of money in Bank Nifty, but that is not the case. It requires very strict discipline, and generally the stop losses will be very deep. So I suggest do a lot of back testing and try to see for yourself, should you be doing Bank Nifty or Nifty. That is absolutely as per your risk management and risk appetite. But this strategy will definitely work. This strategy definitely works with Bank Nifty also. So let's get started. So I'm in 19th March. Let's see how it plays. As I said, we will be waiting for first three candles to close, and then we'll be marking high and low, and then we'll see what. Then we'll try to analyze what type of trade that we need to take. So I'm just pausing it here. Let me just, yeah. So I'm just pausing it here. So now I have a uh, high and low of first 15 minutes. So I'm just going to mark the lines for you. So this is the first, sorry, I think this is the first 15-minute high, and this is going to be the first 15-minute low. This low, yeah. So let me just put it in the text also so that it acts as a reference point. So high is 33,893. Low is 33,585. Uh, Roughly a range of about 300 points, right? 300 plus points, right? 300 points. Let's put it 300 points. Okay. So now my stop loss, as I said, we will be following 1 is to 1 at max, 1 is to 1.15, or as per your risk appetite. So we will be waiting for any close to happen above the high or low. If it happens above, we'll be going for a long trade in the subsequent candle. If it happens below, we'll be going for a short trade in the subsequent candle. So let's start. Let's see how what type of trade opportunity that it has given. So far, none. So it's still in the range. So we're waiting for patiently for it to close above or below. So I think this is the first close. I'm just pausing it here. So this is the first close. If you can see, just a minute, I just running it. Yeah. So this is the first close that has happened above our range, which is 33,995. So mechanically, I'll be entering this trade at a long trade at long at 33,995. I will be looking for about 300 points. Uh, points target. So which is around 34,300 is my target zone, right? And my stop loss is again going to be deep. As I said, Bank Nifty comes with a lot of risk, and again, where there is risk, the reward is also even better. So the stop loss is again, I will be looking to exit this trade if it closes below this, right? Pretty clear. So I'll just mark the zone for you so that we will see, it'll be very clear like when to exit. So 34,300 type of zone. Let's say this is the zone. Okay, this is the zone. Okay, yeah. Let's put this. Yeah. So I'm looking to exit around this zone. I have entered this trade here, and now let's see how Bank Nifty played for the day. So it's still in the range, so it's giving you enough opportunities to enter, right? So there is opportunity here, there is opportunity here. It is actually looking at this, it is actually taking a support here, right? So it is still, so enough opportunities, right? Enough opportunity. I think the people who will follow the strategy will know it definitely. I think no, almost we are done with the target. It's there almost again. So still in the range. Still our technically our target has not yet hit. So we'll still keep on waiting. Again, entry point here. Again, an entry point here. So we'll just keep on waiting. And as I said, Bank Nifty comes with a lot of risk. The stop losses has to be deep enough for the index to give you a trade. Otherwise, what happens is generally people come with a stop loss of 100 points, and 100 points for Bank Nifty here and there is nothing. It's just in a fraction of seconds it can move here and there. So your stop losses either should be your day high, day low, that kind of stuff. So just see the trade. So see, we in the trade still almost missed the trade, missed the target by about some bit of a point. But again, as I said, if you are a mechanical trader, you will wait for your target, or if you're a disciplined enough trader, you'll just trail your stop losses and keep booking your profit. But it's better to be a mechanical trader and not to use discretion, because discretion comes with a lot of ifs and buts. Comes with a lot of emotions also. So see, again, we are almost close to the target and still waiting for it to hit. I think, yeah. So that's it. Yeah, it clearly hit the target. You can clearly see. Yeah. So trade was pretty simple. As I said, the strategy works very beautifully. I would request everybody to do a good amount of backtesting before you venture into Nifty, Bank Nifty specifically. Nifty, I'm pretty confident everybody can do it. Avoid wide range 15 minutes for the starters, for the beginners. Try to go for trades in Nifty which has a range of about 50 to 60 points. 100 plus points, it's certainly a good trade, but you should have a very good risk management, because stop loss of 100 points even with one lot is about 7,500 rupees. So I hope this strategy, uh, everybody loved, everybody understood the strategy, and do let me know if you have any questions. I would be more than happy to explain you. So looking forward to hearing from you. Till then, do a lot of backtesting and see the results for yourself. Only do the trading with this strategy once you feel you're comfortable. Uh, Again, I'm saying you have to be mechanical. Don't put emotions into play. Otherwise, a lot of trades, you will miss out on a lot of trades. Key things: mark out the first 15 minutes high and low. It's as simple as that. Wait for any type of uh, breakout, either on the upside of the time frame or on the lower side of the time frame, and take a trade accordingly. If it closes above, you're going looking for a long trade. If it closes down, you're looking for a short trade. That's it. So I hope everybody enjoyed this strategy. It's pretty simple. Just follow it. Do a lot of backtesting. Don't do it for stocks as of now. Get yourself used to it with Nifty and Bank Nifty, and then certainly this also works in all the future stocks. But I would suggest stick with Nifty for the time being, till the time you are absolutely confident and comfortable with this trade. Thank you and have a very nice day.